Many people do ask me, why did we become a bank? What's the benefit or what's the advantage of becoming a bank? Why couldn't you have remained as an NBFC? If you want to create a sustainable, a long-term, scalable value proposition, a banking format is something which is a lot more kind of, broad-based.
Yeah.
And that broad-based platform enables you to scale up over a long period of time to a different level. Which typically, in my personal view, NBFCs may struggle to kind of deliver that level of growth over a longer period of time.
What has that 8-year journey as a bank or a small finance bank, how has that played out for you?
Equitas has an NBFC MFI in 2007. And there was a guideline from RBI for a differentiated banking license which came in 2014. And we applied for that. RBI gave us the license in 2015, converted our NBFCs into a bank in 2016 September. As a bank, we calculate what we call as a landed cost of money, which is the interest cost that we pay on deposits, plus the entire liability team which we set up as a bank to mobilize deposits, the entire cost of the liability team, and there's a certain level of negative carry on our SLR/CRR investment, which we have to make as a bank. So if I add all the three components, that we call as a landed cost. And actually the cost of raising the money in the bank, that's what we call as landed cost. When we were an NBFC, it was 10.5%. The day we became a bank, that moved to 13%.
Okay.
Because my interest cost went down, but I suddenly had to take about 3,500 people to mobilize deposits.
Yeah.
As an NBFC, I had 3 people raising money from the banks. 3 became 3,500 people.
Sure.
Efficiency of mobilization also going up. So because of all of that, the 13 has now become 9. What we believe is in a 3-year time frame, that 9 should ideally come to anywhere around 7.5%.
Okay.
And in a 5-year time frame, that 7.5% should go down to anywhere around 6.5%.
Okay.
And when that happens, which is our landed cost of money, right? That's when we will actually cease to be a kind of an NBFC combined bank kind of a structure that we are today looking at, to a real bank where our cost of funds is significantly better than the best NBFC and closer to the large banks. So in a 12-year time frame is what we think we can deliver that. I mean, 10-year becomes 12-year, largely because my feeling is that the 2-year corona period kind of set us back. So more or less the 10-year plus the 2-year corona, so that's a transition or that's a trajectory that we are looking at to get the benefit of what we initially planned as we converted.
I want to ask one question for sure, which is on the liabilities front. You're still growing on CASA. CASA ratio not so much, but CASA absolute numbers, you are growing. Fixed deposits, of course, you're growing. How are you getting these numbers?
As you mentioned, we do pay 7% at some slabs for savings interest rate. And on term deposit, we pay our peak is 8.5% compared to 7.25%, which is a peak for most of the large banks. So I am about a 1.25% higher than the large banks. Second thing is that we do a lot of brand promotion. And when I say brand, I don't mean national brand building, but I'm saying at a local catchment area. So every month, we do nearly about 800-900 events across our 400 odd liability branches. Every month. We are reaching out to approximately 75,000-80,000 new people in that 2-3 kilometer catchment area, telling them that there is a branch of a bank just around the corner for you. We do have an attractive interest rate, but also at the same time we do give a good service, and we are also in a position to offer a relationship manager to you at a value lower than what maybe other large banks offer, and so there can be a better personalized service for you in a branch very close to you.
Entering the SME business, is that the customer base that you're targeting?
Data contributed by NSSO, the National Survey Organization, as well as IFC and CRISIL. There's a lot of data available in the Indian market. As per those data, there are about 55 million small businesses in the country. Out of 55 or 60 million small business houses, approximately 45 million of them own a house property. And out of that, about 1 million people have actually been able to avail a loan. Okay, so that leaves about 44 million households who are running some small businesses who also have a house property. It's not like it's got to be an unsecured loan for them. They do own a house property, and yet they are not able to avail a loan from any of the organized players. So that's a kind of demand gap that we are looking at. And if you translate that into an amount, you're really talking something like about 25 lakh crores of unmet credit demand from small business people and who have a house property to even give as a collateral. I mean, that's a large segment, and so we have actually been building our strengths on that. Today, about 15,000 crore of our loan is from that small business segment, but the unmet demand is like huge.
Why do you think banks have not tapped into this? Because clearly it looks like a great business opportunity.
It's got to be in your DNA. It's very difficult to do this business if it's not in your DNA. In 2012, we did a survey amongst our microfinance customers, and we figured out that approximately 15% of the MFI borrowers actually have a business where they have been able to scale up.
Right.
But having scaled up, they are not able to get the next level of funding from the bank. The microfinance is okay only to come for the initial scale up. After that, when they want to scale further, they need a bigger loan, and banks are really not available for them to do that kind of lending for whatever reasons. Then we thought, why not we fill that gap? So we introduced our what we call internally as our micro lab, micro loan against property, for those small businesses who are able to scale from beyond the microfinance to a real retail business. So we introduced that micro lab in 2012, and that's how our journey continued. And today microfinance contributes about 18% of the book, while 38% is our small business loan, 25% is commercial vehicles, and about 10-11% is our affordable housing.
Okay. Thank you so much for coming down to our studios and taking time out from your busy schedule talking to us, sir.
Sure.
Thank you so much.
Thank you. It's my pleasure.